This is not what I need right now. Oh, there we go. Hey, happy
Here we go.
Thursday.
Live.
Right? Thursday. Oh my God. It's been one of those weeks. So Katie Moe here with Connect California Homes, Jenna Gray Bennett, Guaranteed Rate. We hopped on a little bit early because it is one of those days, but we did not want to miss the conversation around what is happening or what was announced with the CalHFA program. I'm going to be kind of silent. I might ask some questions. We're going to give you guys a very quick overview about this exciting announcement, and I'm going to let Jenna take it from here. Go, Jenna.
So if you look on social media, every single lender is talking about this, right? It's the California Dream for All. It's a new CalHFA program that was released on Monday. It looks really, 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 really good from the outset. CalHFA essentially has X amount of funds that have been allocated towards this program. The funds will ultimately run out, and we're going to have a huge run for this program because at first glance, it appears really shiny, right? So they're promising you that they will give you up to 20% down. That can be used towards closing costs and down payment. So you can, if you do less than 20% down, you would have mortgage insurance and you can use the rest for your closing costs. So essentially you can finance like 100% and come out of pocket $0, right? Like, wow, right? This is something that's like great. However, it is an equity share program, right? So let me give you some rough numbers. If you have a $500,000 purchase, if you purchase for $500,000, 20% is $100,000. In the event that you refinance the loan or sell the home, you not only owe that $100,000 back, right? You got to pay it back, but you also are giving them 20% of the equity of the appreciation, right?
Yes.
So for example, if your property appreciates $100,000, you're going to pay back $100,000 for the down payment that you borrowed for them, plus $20,000. Right?
Wow. Okay.
So you're borrowing this money essentially at a 20% interest rate.
Yeah. So it's funny because it's a teaser in we talk about lenders who give teaser rates. So it's a gamble. The reward is that you get the down payment assistance at the time of purchasing. The risk is the payback on the appreciation of the house, right?
Right. It's essentially borrowing money at a very expensive interest rate.
Wow.
Now, let's talk about some other risks for this. So number one, if you're in a multiple offer situation, you can forget it because no listing agent is going to consider this program over a regular offer, like a conventional offer, right? Because you really essentially have no skin in the game. It's 100% financing. Okay. That's number one. So this program was only really going to work on properties that have been sitting on market. They're looking for more offers, and it's not going to be competitive, right? Secondarily, if depending on the appreciation, what's not being taken into consideration is when you sell your house, you're spending 5-6% on real estate commissions, right? So that's subtracted out of your 100,000. Like we're just using 100,000 in equity, right? So 5 to 6% gets taken out for your real estate commissions. Then you're paying back $20,000 for the shared appreciation. You're paying back the $100,000 down payment that you borrowed. So this is, in my opinion, just really expensive money. It's just another one of those things where it looks really great from the outset, but essentially it's kind of like robbing you from the equity that you could have if you just did like a low down payment, conventional or FHA type product.
So I think it sounds, I have a couple things that are like boom, bing, bing, bing.
Yeah.
First and foremost, it sounds like if you are looking at exploring use of this program, please make sure to have your mortgage broker analyze all the different programs that are available to you. Like you said, there are other low down payment, FHA, whatever they may be, that allow you to have a lower down payment to get you into a house. Some of my concerns are, one, what if, we all know that people move usually because of life situations. The average time that people stay in a home has gotten longer. However, life happens, and say that something goes on in your life and you have to sell your house in a down market. what is the stipulation if you're selling your home, say you bought it for $500,000 using this program, and your value of your home has decreased and you have to sell because of a work life situation? Do you know, is there a loophole? Like, that's like a very, very worst case scenario.
Yeah.
But like what happens in the event of that?
You owe that money. You must pay back the 20%. If there's no appreciation, then 20% of nothing is nothing, but you
Okay.
will still owe that 20%.
That you borrowed initially.
Correct.
Wow.
Correct. So what I see is that, in a down market, if you don't have the equity, what is the foreclosure rate going to look like on
Yes.
that? Right? You have no skin in the game. You have no reason,
yeah. And that's it's funny. That's really a lot of what happened when we had our previous downturn. All the people stated income, 0% down, 100% financing. And then the market turned and nobody had any equity in their house. So really, one of the biggest concerns with this, if you are a buyer, is wondering, like the whole idea of homeownership is building equity, right? That's the whole idea, is to have your equity grow. And this one, you're putting yourself really at a 20% disadvantage from day one.
Yeah.
So and you're banking on the fact that California real estate does continuously appreciate. Is there an ideal profile for this program that it actually would work for?
So of course, every one of these programs has a certain, borrower type that fits into it. If you simply have no down payment but you can afford the monthly payment, but you just don't have anything saved and you fit into the criteria of this program, and you're okay with giving up, 20% of the equity when you sell, then okay, right? Then you know what you're getting yourself into. So sure, can this help certain people? Absolutely. If you have other avenues to get into the house, gift funds, utilizing these lower down payment options where you don't have to give away 20% of your appreciation, then that's the route you should take, right? You shouldn't just use this program because yippee, I get 20%. The other argument is, well, it's helping people qualify for higher price points because, they've got this 20% down and their loan amount, their core loan amount is lower. And so it's helping them qualify for more. But then, there are kind of like ethical issues around that, right? You're helping someone kind of qualify for this higher price point that maybe they shouldn't be looking in if they don't have the funds in the bank saved up for, to be able to afford it without these types of programs. So yeah, I'm the contrarian on this.
Interesting. I like that. I think that there will be a lot of people. I've received communication, like you said, it's all over my social media from realtors and loan officers alike talking about this program. I think that you have to look at the risks and the potential rewards. It's really interesting, the idea that, yes, it's helping you get into a house now. However, you are giving up 20% when you do go to sell. And it's funny, when I'm working with buyers, I'm always like, hey, someday you're going to be the seller of this house. So let's look at location. Let's look at, all those like external assets and external influences that can affect the value of a home. But in this case, no matter what, when you go to sell the house, if you use this program, you're going to have to pay back at 20% of your appreciation. Wow.
Right. It would be like me saying, Katie, I'm going to let you borrow $100,000, but it's at a 20% interest rate.
Yeah. And it worries me. Again, we're going to be really short and sweet today, but this is just, I think, one perspective. And I think we, as Jenna and I always do, we always encourage people to talk to their professionals, talk to trusted advisors. If you have more questions, contact us. I'm going to put Jenna's information right there, how to contact Jenna. It's so important to ask the questions because it isn't for everyone. And you know what? If you do this and it's worth it to you, then it is worth it to you. But do not believe everything you read out there. Ask the questions. Look at all the scenarios. Run the scenarios.
Your lender must go through the pros and cons. They cannot. I see so many lenders pushing this so hard. And I know we all want the business, guys. We all want the business. There's not a lot of it out there. The market's slow. I get it. This is something to push. It's something to get on social media and talk to anyone who will listen about. But it's so important that the lender you are talking to goes through the good, the bad, the ugly, whatever it is about any type of loan program you're getting yourself into.
I'm worried that in a state where homeownership affordability is our greatest challenge, that this is going to be a program that's going to dangle as a carrot in front of a lot of people. And then in 5 to 10 years, when sellers are going to sell, those poor listing agents, I mean, that's going to be even harder when they get the bottom line, when they get their estimated closing statement and they're like, wait, what? I'm now having to pay 26%, 25%. Like it's going to hurt. That's going to really, really affect a lot of listing agents as well.
Right. They're going to be like, okay, great. I'm going to sell my house and I'm using my equity to move to this other house. But no, you're paying real estate commissions. You're paying, not to mention like if it's above a certain threshold, and I'm not going to get into tax stuff, but capital gains, right?
Yeah.
Like you might not end up with anything really after it's all said and done, or very little. It feels like a BMR to me. It feels
yeah. Well, and I know there's income thresholds and all that stuff. It's just a lot. So it's 10 o'clock and I apologize, you guys. We hopped on early because we both are having kind of crazy days, but we really wanted to get this out there. If you're just joining us, we will post this on YouTube so that you can see the entire kind of quick perspective of how Jenna feels about the program. Bottom line, talk to your professionals, ask the questions, run the numbers, run the scenarios, and really make sure it's a fit for you, because there is a lot of reward up front, but there's a lot of risk on the back end.
Yeah.
Okay. That was really quick. I'm busy. I know, but it's so important. It's so important. So again, please feel free to reach out to Jenna and I if you have any questions. We are available. This will be on YouTube. Share with friends. And everybody have a great day.
Have a great day.